viewers, it's your opportunity to get your all stock related queries answered by the experts by connecting with us live onto the show. But before we get to that, let's have a look at what the markets are up to. So Cheryl, not a great day for the Indian markets yet again. Bank Nifty trading lower by around 190 points or so.
Right, and I think for that you can blame what is happening with the financial sector as a whole, especially the Bajaj twins. Both of them are getting slammed in today's trading session. Last time I checked, Bajaj Finance was down about 7%, and yes, that's where it is. And also Bajaj Finance, that one also is taking a sharp knock in trade today. It was down about 5% and that's where it is right now as well. So Bajaj twins are the top Nifty losers as well, and a very good morning to you as well, Shrishti. But talking about the markets, yes, a weak one coming in for the markets. We did slip deeper into the red, but then from there on we tried to have some sort of a recovery, and you can see that on the screen also. The line graph is indicating exactly that we dipped lower, we saw some sort of a recovery. Right now we are trading flat with a negative bias as we speak. Nifty Bank is underperforming the benchmark indices, 0.4% downtick coming in for Nifty Bank. The bright spot in today's trading session has to be the FMCG pack. Tata Consumer, Britannia, ITC, Nestle, all of them are part of the top 5 gainers on the Nifty. Add to that Bajaj Auto as well. That's also seeing good strength in today's trading session. Talking about individual sectoral indices and what they are doing, you have the banking sector, like I said, underperforming. FMCG index is the top performing sector today. Auto is also the one that is performing well. Pharma as well holding on to good gains. But let's put the spotlight then on Bajaj Finance, and it is plunging in today's trading session. But what exactly is ailing the stock? What did the Q3 update indicate, and what should you actually make out of it? Let me bring on board my colleague Somit to tell us all about that. Somit, over to you.
Well, in case of Bajaj Finance, if you see, firstly, the company recorded an AUM growth of only 5.7%, which is kind of one of the lowest growth that the company has reported in Q3. And Q3 is important for the company, being the festive period. The growth in Q3 is always the strongest. And in the past, last 10 years, if you see, in the third quarter, the company has been reporting a growth of around 9% on a sequential basis when it comes to AUM. And this quarter, it has reported a growth of only 5.7%. Along with that, if you see, the loan growth has also slowed down for the company. In Q2 it was around 7%. In this quarter it has come in at 6%. Along with this, the new customer acquisition, now in this quarter the customer acquisition was at its highest rate, but it is still lower than what the street was expecting, and that is one of the another reason why the stock is down. And lastly, if you see, the company Bajaj Finance, despite being an underperformance in 2022 compared to Bank Nifty, it underperformed by around 20-25%. But despite this underperformance, Bajaj Finance continues to be one of the most expensive NBFC on street, and it's, if you see its 12-month forward price to book, it's trading at close to 6.4 times. And this is one of the biggest reason why we are seeing such kind of a fall in the share prices of Bajaj Finance, because slower growth or moderated growth coupled with higher valuations has always in past also we have seen led to a fall in the share prices, and that's what is happening with Bajaj Finance in case today.
So much, Somit, for highlighting what's all happening with Bajaj Finance, how the business updates by the company, and what kind of a reaction we are seeing right now. So definitely a sharp fall coming in on both the Bajaj twin stocks. But let's move on and let's shift focus to buy now, sell now lens. And today we're going to be discussing about the gold prices, because if you see, gold is hovering around its record high levels, post closing in on $56,000 per 1,000 rupees per 10 grams. Now, what will be the triggers that make gold shine in 2023? We'll discuss all of that, but let's welcome on board Sharad, who is here to tell us more on this.
Well, yes, gold is shining pretty much across all asset classes, and we can see it's the MCX gold spot rates. They are almost near the 2.5-year highs, and they are closing in on the rupees 56,000 per 10-gram mark. And this is pretty important, and important development coming in is that in August 2020 itself, we see their lifetime high levels were there. The record was set at almost 56,191 rupees per 10 gram. But now let's look at the movement, what has happened. And from September lows itself, if you see the MCX gold spot returns, that has come in almost 13% up as well. And if we see the one-year returns, that is also coming in at almost 16%. Now this is outperforming most of the asset classes, while Nifty also rose almost, you can say, 4.5% over the last one-year basis. And even the international gold prices, they were also on a tear, seeing from the September lows as well. But let's look at the important reasons. What are the important triggers for the gold for 2023 and why it can sparkle as what analysts and experts are estimating? Now there is a fear amongst investors, and during this time you can see they are trying to go for a safe haven amidst the market volatility which have been seen. Now because of this, there is a value erosion happening across financial assets. Take Bitcoin, take interest rate sensitive sectors such as the IT sector, where market cap erosion is happening across the listed space. That's another reason coming in is the FOMC rates hike, which is in the final stage as well. Now, from this point, we move to the important point being the central banks. They are increasing their purchase of gold. And lastly, the most important point is a strong investment demand is coming, especially in the domestic Indian markets. And apart from this, the marriage season is here, and even the jewelry demand has picked up, as we can say, updates coming in from Titan and other jewelry stocks as well. But the entire crux is being fear. Now, fear comes for the investors, even for institutions and other assets where we are deploying apart from gold.
All right, thank you so much for that, Sharath, for putting into context what exactly is happening on the gold front. No doubt, the COMEX gold right now is near the June highs, but back home, MCX gold is hovering near that record high level. So let's bring on board our guests for today. We have Kunal Bothra as well as Mr. G. Chokalingam joining us on the show. And good morning to both of you. And Kunal, I believe you flagged this off towards the fag end of the year 2022, that this year could be the year for a comeback in gold. And do you see that happening? At least we can see that happening, but do you think that this will sustain through the course of the year, where the gold will continue to shine bright?
Good morning, Cheryl. Good morning, everyone. So there are a lot of reasons to believe so. And, we'll start off with, what happened with gold prices. Initially at 2022 start, crypto was considered to be the best hedge as compared to inflation. But then, after the sell-off, gold would probably, get a lot of prominence. In fact, on the gold prices, on the short-term charts, there has been a bigger breakout in the rupee terms. So as you can see that the stock, in fact, the asset class has managed to break past about two important hurdles, 53,000 and 54,500. These are two important hurdles which gold has crossed in the rupee terms. On the dollar terms, it's yet to cross about the life highs. I think 2160 approximately is the life high in dollar terms for gold prices. But then, given the kind of recovery, given the kind of price trends being observed over there, I would believe that possibly in 2023, in the second half, we could expect gold to hit back life highs in dollar terms as well, and that could probably bode very well for gold prices for the entire calendar year 2023. So maintain that bullish stance on gold prices as well as on silver prices.
And where do you expect the Indian gold, the MCX gold, to hover around, Kunal? Because back home, then all of us have to think about it, right?
So, I'll be conservative over here. So we can expect maybe a 10 to 15% kind of a modest rise over here. So that could probably take the gold prices above the 60,000 mark quite easily from current levels. But then we have to look at the extremes. So, the euphoria is yet to set in and the gold prices. The realization is yet to set in that the gold prices are trading at life high levels, and possibly they could rally up much further from current zones. So once the euphoria kicks in, the returns could be far more higher. So possibly 60,000 plus is what one could look out for as a modest target, but won't be surprised if the gold prices actually hit much higher levels than 60,000 plus as well.
Okay, so 60,000 plus is something that Kunal is looking out for. But Mr. Chokalingam, coming to you, because from different asset classes, if we see 2022 debt and equity side, it didn't perform really well, but it was gold that actually shone back in the calendar year 2022. Coming 2023, what's your outlook on the gold, and what could be the likely triggers for the same?
Yeah, it all depends on how crude oil behaves. In my firm view and understanding from economics perspective, gold decides a lot. Many other asset classes, including Indian equity and crude oil decides a lot the behavior of Indian equity as well as gold. Why? If according to me, the global pain is always India's gain. It was proven Lehman crisis, Corona time, 2016. What I mean, whenever the world economy sinks, the oil price crashes, and that benefits India by saving a lot of money. So for the next 6 months, I believe the crude oil would remain subdued. Gold will remain little firm. But for whole of 23, I believe oil will do much better than the gold, because everybody is projecting, economic recovery, global economic recovery from the middle of 23. And if you take International Energy Agency, they are talking of a shift in the global demand for oil by 2.25 million barrel. And Chinese COVID crisis now helping us for oil to fall. But, we all know every economy has come out of Omicron spread within few months. So Chinese economy also may start improving from middle of 23. That also will lift oil prices. And most importantly, US has sold oil from the reserves, around 180 million barrel of oil, and now they are left with 372 million barrel, which is equivalent to only 18-19 days of consumption. So the US government also indicated that at right time they will start buying oil from the market. Then we know the Russia OPEC cartel, they were so powerful when COVID, still there, the oil price went to $128. So the moment economy starts improving, this cartelization will see that oil price goes up. So therefore, I believe that is there any way to play? It is better to play on oil rather than gold. However, the domestic investors can to some extent play on landed, the gold which is driven by the domestic prices. Because in my view, the rupee is likely to sink further in 23. So longer period or even short period, if you see, even if international gold price doesn't go up, the domestic price goes up because the rupee depreciation is inbuilt. Therefore, gold can be a safe defensive asset even for 23. One has to understand, finally, the major structural change, which is across the world, including India, the investor base has doubled or tripled. A lot of millennials have come, and their investment behavior, for many of them, pick up any asset class which shows a lot of momentum in the short term itself. Unfortunately, the gold doesn't show that kind of momentum in the short term. And that is why people moved away from gold to crypto. So this trend is also likely to continue, which also will be negative for gold. So therefore, I would suggest have a little exposure to gold, but if there is any way to play on crude oil, especially after 2-3 months, I think it's going to rally substantially after June, July.
Substantially after June, July, but that is for crude. And Kunal, what's your view on crude oil prices? Do you think that that mild bit of happiness that we all are feeling looking at the crude price decline below the $80 per barrel mark, will that happiness sustain? Well, gold is all set to shine. What about crude?
So I think it could be dual. So gold prices may rally up higher and crude oil prices may continue to drag lower for itself. And we've seen crude oil prices, Brent crude specifically, going through a double test of this zone. So I think last month or so, if I'm not wrong, end of November, start of December is where Brent crude prices had hit levels of $75, $77 per barrel, and we are back again at the $78 per barrel mark. So we are almost double testing the previous lows. And if we manage to break below this 78, 75, 77 mark, then we could be looking at a much sharper correction for crude oil prices. And that goes in sync with how the global setup is, with respect to the talks about recession, etc. And that is an ideal setup where crude oil prices, they tend to get into a downward correction and the money moves into safety havens like gold, etc. So the setup seems to be more ideal, and possibly gold prices can rally up and crude oil prices can continue to correct from current levels as well.
Okay, so that's the view from our experts on gold as well as crude, where they are headed, especially in the second half of this calendar year. What are the levels that you should be watching out for? But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come back, we'll be taking up all your stock-related queries, so stay tuned.
powered by ArcelorMittal.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we have our experts today, Kunal Bothra and Mr. G. Chokalingam. And remember, this is the show where we get you answers on all of your stock-related queries. So do write into us. We are live on YouTube, Twitter, Facebook, as well as you can connect to us on WhatsApp. The number will be flashing on the top of your screen very shortly. But before we proceed with taking your stock-related queries, Mr. Chokalingam, we did speak about different asset classes in the first half of the show. But what's your take on retail investors who are invested in the equity markets? What should they do to protect their wealth?
Yeah. The most important thing is that they should minimize the risk at the asset class level. Never put more than 50% of your financial wealth in the equity. That is the first lesson. Unless you are an equity professional yourself with vast experience and knowledge. Then second, within the equity asset class, don't put 100% to small caps. You know, this market has taught very bitter lessons, even for a person like me, who primarily used to recommend only small cap. The lesson is that fundamentals can improve, but still the small cap stock can fall even 30-50%. This was not the case 20-30 years ago, but today it happens in a very big way, very difficult to understand the reasons. So therefore, you know, one should not put 100% in small and mid cap. The second reason, if there is any crisis, if there is any sudden war, or there is any sudden mutation of new deadly variant, you can't exit. You will see your stocks going down overnight, 20% in a week's time, 40%. So therefore, within the equity asset class, I would suggest that you put minimum 30-40% of your equity assets in the Nifty Sensex stocks. Another 20%, the top 250 stocks, that is other than Nifty, top 250 stocks. I'm not saying that, they give you a guarantee that you will not lose money, but the single biggest advantage, normally, majority of them fall least. Because if these stocks are to fall 20-30% like small cap, the whole stock market will crash. And then DIs will come and support. So therefore, these are the two broad strategies. So after having invested 60% in the index and the large cap stocks, 30-40% you can invest in small and mid cap. Never avoid small and mid cap, because in this market, if you want to create wealth, this is the only space. And there you adopt 5 to 6 strategies. Unfortunately, I have seen many people losing wealth to the extent of even 80-90%, because they don't even look at what is P and invest. So look at the 5 parameters: management quality, balance sheet strength, things like that. Then valuation comfort and listing experience. Then this is a market to make a lot of wealth in the long term.
Absolutely. So that's the advice coming in for all the retail investors out there. But let's just quickly start taking all your stock-related queries. And Mr. Chokalingam, the first question is for you. That's coming from Subrata Ghosh, because we were discussing about Bajaj Finance. So he says that he held Bajaj Finance from 18,000 levels till 7,000 of levels, but exited some of the quantity. But he still has 650 shares at a price of 6,900. After the sharp fall we are seeing in this particular counter, is this a good time to average out this particular counter? What will be your advice?
No, I would suggest still in profit one can sell Bajaj Finance, because 2 reasons. I have been saying all along that arithmetic has got a beauty. When you are growing at 40, 50, 60% year on year, but when the base becomes much bigger, day will come, your growth rate will sink. That's what happened to HDFC Bank. It used to grow profits 40-50% long ago. Now it is 15 to 18%. So soon, Bajaj Finance growth rate also would come down, because this is arithmetic limitation. And secondly, the valuation multiple also exorbitantly high. To sustain that kind of valuation multiple, it has to grow profits consistently 50% or above, which I doubt. Third, NBFCs do not have access to cheap deposits, and NBFCs depend heavily on banks. We have seen a couple of days back, NBFCs have borrowed heavily at a record level from the banks. So now, in most areas, the banks are also competing with the NBFCs, having access to own CASA deposit at a throwaway cost. So therefore, I would not be comfortable at this kind of valuation. A person is making profit, one can sell Bajaj Finance.
All right, so that's the view. If you're making profit, then you can look to exit from Bajaj Finance. But Abhijit Kunal has SBI cards at 820 rupees per share. He's currently sitting on some losses. What should be the strategy for the next 1 year? Should he average down or book losses?
No, I think you can continue to hold on as of now, but I would not be too much enthused about the charts for SBI Cards. It's been a stock which has underperformed, I think, for last 4 months, on a trot. I think month of September or August is where the stock had hit levels of 1,000 plus, and from there, the last 4 months, the stock has just continuously dragged, and now it's sub the 800 mark as well, reeling below the 200-day moving average, 50-day moving average, and the stock is also on the verge of breaking below the key support point. So, as of now, I would suggest a hold. In case if there is a turnaround where the volumes would start to spike, then I believe could be a case of a turnaround for SBI Cards. But as of now, you can just hold on.
Okay, Kunal, the next one is for you. K. Venugopal Reddy has bought 100 shares of Infosys at a price of 1,700. The stock is currently at 1,500. Good time to average.
Well, I would suggest to wait out for maybe another week or so, let the results come out for these IT stocks, and then probably take a call, because, Infosys, for example, has been struggling in the last 1 month. I think the stock made a high which was around the 1650 plus mark, and from there it's corrected more than 10%. The only concern is that if the results disappoint, then these stocks can get into a sharper correction further. In case if these stocks rally up higher, there would always be better opportunities or better entry points which you can probably look out for stocks like Infosys. So I would suggest a wait as of now.
All right, another one coming your way, Kunal, actually. This is Ami writing to us, and he's bought 1,500 shares of NCC 4 years ago at an average price of 78 rupees per share. Can Ami look to hold for a year, and what sort of a rate should be the exit rate?
So, NCC is starting to look very attractive on the monthly as well as on the quarterly charts. I think, if I'm not wrong, the last 2 quarters, the stock has given very strong positive returns for itself, recovering from, I think, 50-55, which was the low for NCC. So the recovery is quite strong. The only concern is that in case if the market starts to dip, then these high beta stocks, they may also start to get into a corrective phase. So however good their chart patterns are, there could be a phase where the correction could be a bit more sharp as well as intense into these stocks. Best strategy over here, book out 50% of your profits at current levels. And in case if the market gets into a mild correction, the stock corrects and say NCC comes back towards 80-82 mark, that could be a point where you can look to rebuy.
All right, on that note, we'll actually quickly slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue with the journey of taking your queries, so viewers, don't go anywhere.
The market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
Welcome back to Buy Now, Sell Now, and resting the fall in the markets because Nifty is seen to be breaking its yesterday's low and now seen to be trading at day's low point, and another 100 points fall coming in on Bank Nifty, down about 270 odd points. But let's get back to taking all your stock related queries. And Mr. Chokalingam, the next query that we have is from Veni. She's at a huge loss in two counters. Firstly is Amara Raja Batteries at a price of 760 she entered, and the other one is Lakshmi Organics. She entered this at a price of 430. So she wants to know a price where she can average out these counters, or would you advise to book losses at these levels?
I would not advise booking losses. One can hold both of them. After December results, if the trend is favorable in terms of improvement in the sales and profit, the investor can add them and average the cost down.
All right, this one is coming from Deepak. He's bought Finotech Chemicals last week after seeing this stock going down to 250 levels to around 450 levels, Kunal. He was confident that the promoter was systematically buying around these levels. So what's your view on this particular counter? Do you foresee a 20 to 30% upside in Finotech Chemicals?
Not really. I think the stock has been selling off on higher volumes. I think it's also fallen very, very sharply on the chart. So even though the indicators are oversold, but the stock is not seeing any reasonable bounce, that's generally a sign that the stock would probably correct a bit more. So would suggest an avoid on Finotech Chemicals.
Okay, Kunal, the next question is from Vicky. He's holding Saxoft. He didn't share the entry price for this one, but he's saying that the stock is already at an all-time high level. So what should be the advice? Book profits in this one or continue to ride on?
So again, it depends on what's your entry price. If it's at a much lower price, then you can continue to hold on. The stock has been more stable stock, less volatile and not prone to too much of gyrations in terms of market moves. The stock is now trading, I think, at 130 plus levels, which is already at a live high levels. The indicators, the volume patterns are quite stable for the stock price. So it depends on your entry price, but if it's much lower, then I think you can continue to hold on.
All right, this one is coming from Santi and wants both the experts' view on risk-reward opportunity to do a fresh buying in SRF and Navin Fluorine at current levels, taking into consideration the China reopened trade as well as global economy being in the bad shape. Mr. Chokalingam, I would request you to go first on SRF and Navin Fluorine. Do you think that it's worth a buy at current levels?
Both are great company, proven performance, but then still at this price, I won't suggest. Wait for December results. Post results, if they correct at least 5-10%, then you can accumulate.
View on both of them?
Well, I would suggest to avoid both of these stocks. They've underperformed. The selling is still quite intense into these names, and I would believe it would take at least a couple of quarters for these stocks to lift off and convert this downtrend into any kind of a reversal or an uptrend. So I would suggest an avoid.
Okay, Mr. Chokalingam, Vicky wants to know the fundamental view on Vaibhav Global. He's holding 200 shares at a price of 330, currently at a loss. For the next 6 to 12 months, what will be your advice, hold or average?
If he is making losses, he can hold. Otherwise, normally I do not recommend these kind of stocks, particularly related to jewelry businesses, except Titan, because it is very difficult to understand the balance sheet. So therefore, if you are not losing, book it. If you are losing, just wait for your average price to recover.
All right, the next one that I have is from Nino, and Kunal wants a technical view on Surya Roshni. He's holding about 100 shares at a price of around 490 rupees per share. What will be ideal range to book profits, or should he continue holding Surya Roshni?
So I remember, I think I had have been giving a bullish view on Surya Roshni from the time when the stock was at 450 plus levels. It's moved up quite well now, almost at 550 plus mark for itself. I think it's a good time where you can look to book out profits. The volumes in the last 2 days have increased suddenly for the stock price. So there could be a possibility that some bit of profit booking could seep into the stock price. So you can book out profits over here and then look to buy back again if the stock maybe corrects back towards 520, 530 mark.
Okay, Mr. Chokalingam, Sugumar is holding shares of SJVN at an average price of 36 rupees 50 paise. What will be the advice going ahead for him?
It's a good stock in terms of dividend yield. So if he's a defensive investor, happy with the dividend yield, he can hold. Otherwise, move to some other momentum growth stock, because here the growth is limited for this company.
Okay, the next one that I have is coming in from the query actually was a long-term query, but instead I will ask you, Kunal, because wants to know about the averaging cost and what should the strategy be. So this one is coming from Akash Mathur. ICICI Bank, he has at 798 rupees per share. IDFC First Bank at 60 rupees per share. He wants to know what's the long-term perspective of both the counters, at what price should he average? And he's asking you, are financials like the next IT that is set to decline?
Well, very difficult to say that, but ICICI Bank is one of the stock which has underperformed. Now, it's very much possible that the stock can underperform, with respect to the other peers for at least another couple of months, if not more. So if you're looking to time these stocks and looking out for better averaging opportunity, you have to wait out for the point where the selling is at its peak and the news flow is extremely negative for such kind of stock prices. I would probably believe that maybe in the next 1 or 2 months, you could get such kind of an opportunity for ICICI Bank. IDFC First Bank, on the other hand, I think looks very attractive. The stock is still, perched much significantly above its major breakout points, at least on the weekly as well as on the monthly chart. So maybe the stock corrects towards 52, 53 levels, which was the previous swing low for IDFC First Bank. That is a good level where you can look to average.
Okay, Mr. Chokalingam, the next question is from Hemant, and once again a counter that we have discussed, but this one is on Bajaj Finance. We did touch upon Bajaj Finance, but Hemant is holding it from a price of 1750, currently at a loss of over 15%. He wants to know, is this a good stock still to hold on for the next 2 to 3 years, or should he make a switch to stocks like SBI or Axis?
If he is losing money, he can hold on, definitely, as I mentioned. The problem is only with the rate of growth, but then definitely the growth will be there. So the moment he recovers his cost, he can sell. Till he recovers his cost, he can continue to hold.
Okay. This was coming from Manish Raju, Kunal, and he wants to know if you are foreseeing any upside for tire stocks for the next 2 quarters, which means for the next 6 months or so. And he wants to know, especially for Balkrishna Industries, because he's looking to accumulate. So he wants to know what sort of levels should he look at accumulating this one.
So I think it's a good stock to accumulate. Balkrishna Industries had been underperforming since last, I think, 3-4 months back, as compared to the other tire stocks, whether it's MRF, Apollo Tyres, JK Tyres, Seat, etc. But I think last 1 or 2 months, the stock has started to cover up this underperformance by a big margin. It's come back towards 2150, 2200 mark approximately at current levels. I have flagged off quite bullish calls over the last couple of months, and I would still maintain that bullish stance for Balkrishna Industries. But it's just that when you're looking to buy these kind of stocks, it's always better to try and buy when these stocks are going through a corrective phase. So you can start off at current levels, but maybe in case if there is any kind of a short-term dip towards 2100 mark, 2050 levels for Balkrishna Industries, that's a zone where you should look to average.
Okay, Kunal, let me take the next one from you. Chandrasekhar is holding over 100 shares of BSC from a price of 793, currently at quite a big loss. What will be your advice, hold or sell?
See, I would recommend to exit the stock in case if it's a short to medium term kind of a time horizon. The charts are still looking very wobbly for BSE. The last 5 months, I think 6 months rather, the stock has been going into a downward correction, corrected from 700 levels. Every month the stock is making a lower high kind of a pattern. So if we go by this kind of a scenario, then we can expect even a break below the 500 mark for BSE possibly in the next 1 to 2 months. So it's always better to try and book out losses in such kind of a downward trending stocks.
Right. Mr. Chokalingam, Dikshita wants a long-term perspective, fundamental view basically on Vedanta.
Yeah. Definitely long-term view is too good. There is no doubt at all. Oil, as I said, would bounce back. Even the metals have corrected 30-40% from the peak. They also would recover. Short-term I am negative, but long-term I am quite optimistic.
Chokalingam, Swaminathan is holding shares of Adani Power from a price of 346, currently at a double-digit loss. What will be your advice going ahead? He's a long-term investor.
I think he can book losses and move to some other good quality Sensex Nifty stocks.
Okay, Kunal, Jayakrishnan is writing to us from Kerala. He has Amber Enterprises at a price around 2,160 rupees per share, looking to hold for the medium term, but wants to know what should he do, what sort of strategy should he adopt, and if you are advising that he should exit this counter, then he wants to know which other stock should he enter instead.
So the stock is still going into a corrective phase. You know, it's very difficult to try and preempt then when corrections of such magnitude, they would tend to end because there is no jump in volumes, there is no significant price sell-off. It's just gradual sell-off which happens into stock prices like Amber, and the stock has been reeling below the 200 DMA since I think the last 1 year, if I'm not wrong. So that also probably brings in the case that the correction would continue for some more time. Now the only question is that you'll have to wait out for those signs of turnaround, and that could probably happen if the prices start to spike up for a couple of trading sessions, or the volumes start to jump up higher, which means that the demand is then overpowering supply, and that could probably signal some sort of a bottom formation for Amber. As of now, the signs are not clear for the stock, so it's very difficult to anticipate.
Okay, Mr. Chokalingam, Palukuru is holding shares of Capacite Infra. We don't discuss this stock much often, but he's holding the share from a price of 178, currently at a loss. What will be your advice?
Yeah, in the past I have looked at this balance sheet. I am not comfortable. If he is not losing, he should exit the stock.
This one is coming from Satya, and this one is specifically for you, Mr. Chokalingam. He's saying that he first of all thanked you for the recommendation. He has booked profits in Bank of Maharashtra, Zenzatech and Nesco. Now he's looking to re-enter these counters, but he wants to know, do you still recommend re-entering these spaces, these stocks, or should he look at some other opportunity altogether?
Maharashtra Bank, it is now close to 2 times price to adjusted book value. So if it falls another 5-10%, one can enter. Karnataka Bank, I am not in a position to discuss because of a compliance issue. But Nesco, I can discuss. We have invested. My company also invested. I believe Nesco is the next generation stock. I believe Nesco will create a phenomenal wealth because of land bank, cash on the book, extraordinary delivery capability of the management. I may be wrong, but this is, I believe, that one of the best small cap stocks available in the market today. So we have also invested in the stock.
Okay. Moving on to the next query, we have from Satya Veni. He has a query on 2 counters. Firstly is Amara Raja Batteries. We have already discussed about the same, but the next question he has is on Macrotech Developers. Kunal, what will be your view? He's holding 200 shares from a price of 1,300.
So you can look to average at current levels, or maybe I think a better level to average would be around the 1,000 mark. That's where Macrotech Developers or Lodha is finding good support over the last 5-6 months. I think from the month of April and April-May 2022, the stock has been flatlining around this 1,000 mark plus or minus 100, 150 odd rupees. So if you can probably try and average closer to the 1,000 odd mark and then wait out for maybe a level of 1,150, 1,200, which could be a break-even price for you, that could be a good point where you can look to exit.
Okay, Richa has a query for you, Kunal. He has Chola Finance 21 shares at the price of 729 rupees per share, as well as Tarson's 50 shares at the price of 696 rupees per share. Looking to add some more for the long term, do you think is the right advice?
So Tarson's you can. Chola Finance I'm not sure because again the stock has been underperforming the entire NBFC space over the last 4 to 5 months. Even Chola Finance over the last many months I think has been going through a corrective phase. Chola Finance was actually one of the strongest stock in 2020 from the post-COVID recovery. But then in the last 3-4 months, the stock has been a big underperformer, which means that possibly the spate of underperformance may continue for some more time. I would suggest to avoid Chola Finance at current levels.
All right. Just a note to Seema and Gauri. You all have asked a question on Bajaj Finance and for the longer term. And I believe Mr. Chokalingam is of the view that it makes sense to exit the counter. Isn't it, Mr. Chokalingam? Because for the longer term, the road is looking patchy for Bajaj Finance, right?
Yes, I mean, it's a great company, no doubt on growth, but unless it corrects another 10 to 15, 20%, I would not suggest buying or holding the stock.
All right. On that note, we'll actually slip into a quick break on this edition of Buy Now Sell Now. When we come back, we continue taking your queries. So viewers, don't go anywhere.
पहले से रुक We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Welcome back to Buy Now, Sell Now, and let's get straight to your stock-related queries. And Mr. Chokalingam, the next one we have is from Chandrasekhar. He's holding 2,000 shares of Gujarat Pipavav from a price of 90 rupees. He's a long-term investor, wants to know the outlook on the same.
For long term, you can hold on. Good dividend yield, and there is a further consolidation possible in the port business.
Okay, this one has come from Sagar, and this one is for you, Mr. Chokalingam. He wants to know about consumer durable space as a whole. Since recession is getting predicted, the demand will be low for the companies, and they are already facing supply plus inflation set issues. So he wants to know what is your view on the entire space, which will also include companies like Bata, Relaxo, and also what sort of a growth and earnings projections you have for them.
He is right. There is a slowdown in both rural and urban market. They are growing in single digit. But unfortunately, very interesting fact is that whenever the US Fed rate hikes happen, throughout that cycle, the FMCG sector in India has outperformed because of various reasons. So therefore, I would suggest that he still has exposure to stocks like Hindustan Unilever and Nestle. For some time, you can avoid small cap FMCG stocks.
Okay, I have a lot of funda queries today. So, Mr. Chokalingam, coming back to you, Hamza has asked that is this a good time to enter into national aluminium for at this particular point for dividend purpose?
If we can take a risk of 5-10% for long term, certainly dividend yield is very high. A lot of cash on the books, a lot of expansions are happening. Aluminium holds a lot of long term potential from renewable energy source. So therefore, certainly one can buy.
All right, and with that, let's kickstart with the rapid fire then. And the first one coming your way, Mr. Chokalingam. Sudeep is asking, Suzlon and Yes Bank, does it make sense to buy for the next 5 years?
No.
Okay, Kunal, the next one is for you. I can't see the name of the viewer, but he wants to know entry point for Asian Paints and ITC.
Well, I would believe possibly another 5% correction from current levels at 28.50 could be a good point for Asian Paints. Similar would be the case with ITC.
Aman Soni wants to know how is Galaxy surfactant for the long term. Good time to enter, Mr. Chokalingam?
Yes, in a phased manner, one can buy.
Okay, Mr. Chokalingam, Venkat Jalan wants to know, is this a good time to buy RSWM for long-term perspective?
Textile never buy for long term, it's always cyclical. If it falls further, then you buy.
All right, Chandrakant Sawant wants to know in mid-cap IT space, can look to enter Zensar or Persistent in staggered manner. Kunal?
Persistent, I would believe, is a much better name. You can also look to trade on KPIT Tech as well as Eddington.
Okay, Kunal, Hitesh is holding shares of Asian Paints at a price of 3,090 rupees. He's a long-term investor. What he should do?
See, I would believe that it's better to exit the stock or maybe hedge it at current levels and look to buy back again at 28.50 mark.
Kunal, is it the right time to buy Reliance Industries? Indu is asking.
I would believe about 26.50 is a much better zone to buy Reliance Industries, not at current levels.
Okay, Kunal, Sentiwell is holding shares of Godrej Properties at a price of 1,341 rupees, currently at a loss. Hold or book losses?
I would suggest a hold.
All right, Ajay Kumar wants to know what's the outlook for Power Grid and is it a good stock to enter right now, Mr. Chokalingam?
Unfortunately, I don't track this stock, sorry.
Okay, Mr. Chokalingam, Sakshi is holding 1,000 shares of Angel One at a price of 1,317 rupees. Long-term investor, hold or sell?
I have a bleak view on the online broking business in the long term because of the structural change. If you are in profit, sell it.
Kunal, Raghupati Gopal has 1,150 shares of Tata Steel at a price of 36 rupees per share. What should he do?
You should hold.
Okay, Mr. Chokalingam, Sunil wants to know your favorite stock for 2023.
Nesco.
All right, and with that, we actually come to the end of the rapid fire and the queries. Thank you so much, Mr. Chokalingam, as well as Kunal, for joining us on the show, giving us a take on gold, crude, as well as resolving the viewer queries. And remember, viewers, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our value, we present the second season of Nivesh Ke Funde. And on this edition, we focus on the difference between the direct equity investment and investing in mutual funds. And with that, we also take a wrap on this edition of Buy Now Sell Now.
Hello and welcome to another edition of Nivesh Ke Funde. You know, Avan, at times, investors cannot decide whether they should invest directly in equities or invest via mutual funds.
Yes, Nikunj, that can happen. So today, let's talk about how they're different and, more importantly, which kind of investors they're suited for.
Let's start with direct equity. These are what we usually call shares. They allow an investor to own portion of the company, or they can be a part owner of a business.
Right. And mutual funds are vehicles to invest in different asset classes. Mutual funds invest in equities, bonds, government securities, or other fixed income assets based on what kind of a mutual fund it is.
So importantly, the difference is that in equities, the investor is deciding which shares to invest in, while in mutual funds, there is a fund manager, an expert who will take those decisions.
Right, and the manager, along with the research team of the mutual fund company, take informed decisions on where to invest the investor's money.
Before investing in mutual funds, an investor can decide the category of the mutual fund that they can also choose and that they are comfortable with, and the asset, the companies that the mutual fund is investing in.
For investors that are new to investing, mutual funds are an ideal way to start their investing journey, since the fund manager is constantly tracking their investments to help them get optimum returns.
Another benefit of investing in mutual fund is that an investor's money get invested across large number of securities, even when investing in a single mutual fund.
Yes, and that way the risk undertaken is relatively minimized as opposed to when you invest in the shares of a particular company or companies.
So I want to take this point a little further, Avan. So by investing in mutual funds, investor will get exposure to large number of securities, and the best part is that that can be done at a very low investment amount.
Exactly, Nikunj. With as low as just 100 rupees, which is actually difficult to achieve when you're investing directly in equities.
Yes, another point of difference is to invest in equities, an investor needs to have a demat account.
True. And for mutual funds, the investor does not even need to open a demat account.
And so now you know the difference between investing directly in equities and investing via mutual fund. That is all in this edition of Nivesh Ke Funde. Thank you for watching.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs. ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Another day of listless trade on the Dalal Street. Benchmarks are flat as can be, while broader markets hold on to marginal gains. FMCG stocks gain on operational updates, while crude sensitives remain upbeat in trade as well. The decline in Bajaj Twins weighs on financials.
What will be the recession fear? That's once again returns on the street, weighing on commodity prices across the globe. Crude crashes about 9% in the last couple of days, marking it one of the biggest two-day loss at the start of the year since 1991. Gold, meanwhile, trying to make a comeback, now steady at a 7-month high.
Investors gives a thumbs down to the slowing sequential growth from Bajaj Finance. AUM grew at the slowest pace in 10 years, while the festive season also could not lift loan growth. The street is also concerned about valuations of the most expensive NBFCs.
Talking further about Q2 updates, Marico sees healthy appetite from the shares. This is despite they flagging off a slowdown in the rural demand. However, urban and premium segments see robust growth. Godrej Consumer, meanwhile, expect double-digit sales in the current quarter.